Let's talk about what's called the 5 C's of credit. I don't know about you, but I had never heard of this 6 years ago. So I want to break it down for you. This is, in essence, how lenders think. Number one, the first C is your character. So this is all centered on your credit history because it shows your reliability. This is how they're able to gauge based on your past history if you're going to be able to pay back whatever loan they may give or line of credit that they extend to you. The next C is capacity. This is your ability to repay. If you've ever had anything financed, you may remember someone or a banker saying debt to income ratio. And basically, what that means is they're wanting to look at however much your income is versus how much debt you have and what that ratio is between the two. The lower that ratio is, the better. Capital. This is, of course, your savings and your assets, cash you may have on hand, your net worth, which we're going to get into, right? Collateral. So these are assets that you use to secure a loan. And guys, I want to camp out here for a little bit because there's a lot of us that have been in business for a really long time, but we haven't established credit per se for our business. And so a lot of times I get pushback and there's frustration because it's like, hey, I've been running this business for the last 10 years, the last 15 years. We've been doing very well. We've been, very profitable. I should not have to use my personal home or my personal assets to secure a loan. And in a perfect world, I would say that that's absolutely true. But while we're working together to build that perfect world, we are in a space where if someone gives you a loan, whether it's a bank or a credit union or a credit card extending capital to you, if you have not established credit yet, they are literally going to require that you put up a piece of collateral. And it's really a safety net so that if you don't, for whatever reason, you aren't able to pay that loan back, now they have a piece of collateral to help make sure that they're able to recoup their money. So I know it's not fair, but y'all, as they said, when you're in Rome, you do as the Romans do. And last but not least, conditions. These are simply loan terms and the economic climate. And so you making sure that you have a really high FICO credit score is going to be so important, especially in the days to come.